Welcome back to Metals, Money, and Markets for week ending September 29th, 2017. With me, as always, to break down the information, Mickey Fulp, the Mercenary Geologist. And from miningclips.com, I'm Rob Goodman. Well, Mickey, a theme developing here. Metals under pressure. U.S. dollar takes a nice little hike to the upside, and the markets seem to be still on fire. Let's go ahead and break down the metals first, where a rough week led by silver, who took the brunt of it.
Yeah, I don't pay very much attention to silver because it's such a minor metal, but all the precious metals were down this week, basically on old Yeller's drill and dribble about interest rates and unwinding the Fed balance sheet. So gold ended up at 1280, down 1.3%, silver 1661, down a little bit more than 2%, platinum down almost 2% to 912, and palladium had a 1.5% jump to 929. A couple of things I notice here. The gold silver ratio is now above 77 again. We'll watch that for that magical number of 80. The platinum and gold ratio is at an all-time low of 0.71. And the platinum to palladium ratio is less than one for the first time in 16 years. And that was when the Russians were stopping exports, and GMC took $1 billion loss on palladium. So interesting week for the precious metals, Rob.
Sure, and buttoning up with copper, up a couple pennies here.
Yeah, it had a intra-week, first of the week low at 289 before a midweek rally. Lots of things to like about copper right now. Supply disruptions, mined copper down 2% in the first half of 2017. Concentrates are at a premium at this point. So the Chinese are going to scrap as the price increases. Scrap supplies are coming out of hoarding. BDI, the Baltic Dry Index, at a 3.5-year high, and the 3-month future spread is at a multi-year high. So very bullish on copper going forward.
And moving on to the energy markets, pretty good week all the way around. Oil, 4 straight winners, and up quarterly for the first time in a long time.
Yeah, the U.S. oil industry has rallied after the hurricane, I guess I should say, Hurricane Harvey. Q3 rigs are plus or minus flat, although the drilled and uncompleted wells are a record 7,000 wells. So that shale oil's just sitting there waiting for the fracking and the taps to be turned. Brent is at a 2-year high, with the Brent to WTI arbitrage at 11%. We haven't seen that in ages. Good news from the oil patch. U.S. exports growing, light sweet crude in great demand all over the world. So U.S. energy from the oil and gas viewpoint looks very positive in the mid to long term.
Yeah, meanwhile, uranium stops the 2-week losing streak. Decent gain this week.
Yeah, but it's still at 2055, gained, 38 cents. That's nothing to write home about. Sometimes I wonder why we even talk about this uranium market every week. It's been range bound since early June now. But anyway, it's on our board.
Yep, and you've had your finger on the pulse for some time. Let's move on to the currency markets, where the U.S. dollar had a pretty decent gain. Of course, the euro and loonie off against it.
Yeah, the big rally in the dollar was driven by Yellen's comments, and also favorable response from the business community on the Trump tax plan. Dollar rallied above $93 for a 93 cents, pardon me, for a 1% gain. Euro at 118 for a 1% loss. The loonie continues to lose as it tries to fill the gap from its jump 4 weeks ago. So it lost 1% to close just above 80 cents.
And finishing up with these markets, they still continue to cruise. The S&P and Nasdaq on new highs this week.
All-time highs for a very broad base case of markets. Dow Transport, all-time high. Small caps, Russell 2000, all-time high. Dow finished just off its all-time high at 22,400, 0.2% gain. S&P 500 all-time high today at 2518 for 0.6% gain. Big winner led by techs was Nasdaq at 6496, 1.1% gain. The VIX was below 10 for the last half of the week, so a very broad-based bullish case for markets going forward.
And finishing up with the beloved venture north of the border, a few modest points here.
Yeah, the venture's been flat for 6 weeks, range bound between 764 and 782. Volumes remain low at about 65 million shares per day on the venture exchange itself. Basically, there is and remains no retail interest. The pros are positioning themselves. No retail interest except for a couple of tulip bulb companies, which are setting themselves up for big falls.
All right, Mickey, appreciate the insight, and we'll keep our eye on that wire and see if we got any tax reform or Rand Paul unveils his new health care plan that this president seems to be keeping his eye on. Maybe that'll help the markets out even more. But appreciate the time and have a great weekend.
All right, thanks a lot, Rob.